Gold continues to hold above 4,000, trading around 4,100. It's amazing that people talk about gold being in a correction when it's at 4,100. I mean, it only corrected from a level that it got to for like a day. We haven't spent hardly any time above 4,200. Maybe I was 1 or 2 days. That's it. I mean, gold is right near the highs as far as I'm concerned. Same with silver. Silver's at 51.5. Silver is trading above the double top that went from 1980 to 2011. This is a huge breakout. Don't talk about the silver correction because it's not at 54.40, which was the high. It's at 51.5. This is significant. We are now building a base where the support is the old resistance. What if it takes me a year to finish this? By then, gold could be 5,000, 6,000. Silver could be 100. I don't want people to wait and then buy. Buy now, right? Because the longer you wait, the more expensive it's going to be.
Gold and silver remain firmly positioned in a powerful long-term uptrend, holding near historic highs even as short-term volatility creates the illusion of a correction. Gold continues to consolidate above $4,000, with the broader structure showing support where resistance once stood, an early base for a move toward the $5,000 to $6,000 range. Silver, trading above $51, has already broken out of a 4-decade double top and is steadily building momentum toward a potential $100 phase. These developments come as liquidity tightens, government data becomes unreliable, labor markets weaken, and the return to quantitative easing grows increasingly unavoidable. The metals are not weakening, they are preparing for their next leg higher. Peter Schiff, a leading voice on sound money and monetary history, emphasizes that tokenized gold is making the metal more efficient, more divisible, and more practical as a medium of exchange. Blockchain enhances gold's portability while maintaining the underlying value that fiat currencies continue to lose. Silver, benefiting from both monetary demand and record-breaking structural breakouts, stands to outperform as the bull market accelerates. With policy uncertainty rising, tariffs driving hidden costs, and the dollar facing renewed downside pressure, precious metals are positioned for explosive upside. Now we present the clips from Peter Schiff's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
Gold may be the only real winner, right? Rather than killing gold, blockchain may have just given it a new lease on life by making gold even more efficient than it's ever been as a medium of exchange, making it more liquid, making it more divisible, making it more portable, right? All the characteristics that people think Bitcoin has that are better than gold are worthless without the underlying value of gold. But Bitcoin can have all of those characteristics, those improved characteristics, if you tokenize it. And again, you don't have to transfer physical gold to use gold as payments. Because when we were on the gold standard until 1971, nobody was handing each other bars of gold. We were transacting in paper dollars that were effectively IOUs for gold in the vault. We can do the same thing now with tokens, with digital tokens that are tokenized IOUs for gold that's sitting in a vault. Nobody has to actually go down to the vault and get the gold. The gold just has to be there, giving real value to the tokens, right, that represent ownership of that gold. And buy some gold and silver. Oh, by the way, gold continues to hold above 4,000, trading around 4,100. It's amazing that people talk about gold being in a correction when it's at 4,100. I mean, it only corrected from a level that it got to for like a day. We haven't spent hardly any time above 4,200. Maybe I was 1 or 2 days. That's it. I mean, gold is right near the highs as far as I'm concerned. Same with silver. Silver's at 51.5. Silver is trading above the double top that went from 1980 to 2011. This is a huge breakout. Don't talk about the silver correction because it's not at 54.40, which was the high. It's at 51.5. This is significant. We are now building a base where the support is the old resistance. How much better can it be? And then we're headed a lot higher. So you could buy silver at T-Gold as well. We could buy, you have gold and silver, and you can open up your account very quickly. It's not a long, cumbersome process. And we're going to open up right now. We don't take credit cards yet and debit cards. All that's coming, right? That's all. I'm building it piece by piece, but I didn't want to wait until everything was ready to roll it out. I just want to start to get onboarding people, to start building up the ecosystem and letting people buy gold now. I mean, what if it takes me a year to finish this? By then, gold could be 5,000, 6,000. Silver could be 100. I don't want people to wait and then buy. Buy now, right? Because the longer you wait, the more expensive it's going to be. Moving on. So a couple of other things. We got the minutes from the most recent FOMC meeting that came out today. Oh, and by the way, we also found out we're not going to get the October jobs report. We're supposed to get October's report, not November's. But I think they were supposed to release the October report on the first Monday of December. And then we would have had that report before the FOMC meeting, which is now a coin toss, right, as to whether or not the Fed's going to cut again. Well, the government came out today and said, we're not going to release it. I don't know if they're ever going to release it. Maybe the jobs reports are like the Epstein files, although apparently now they're going to release those, although I'm not really sure how much they're going to redact it. I mean, I'm going to talk about redactions at the end of the podcast when I talk about what I got from the IRS, my most recent FOIA production or their production and what I received from them. But, who knows what we're going to get with respect to this jobs report. But it ain't coming out before the FOMC meeting in December. But we got, a little taste of the meeting or what we're going to get in December from the minutes. And, there's a lot of disagreement at the Fed as to whether or not it's appropriate to cut rates again or leave them where they are. There is certainly some concern about weakness in the labor market. Now, the labor market is much weaker than the Fed is letting on or admitting to or knows. I don't know. But they are worried about it. And so there's no, unanimity in opinion. And so it's keeping people guessing from that respect. But I thought what was significant, and it should have produced a bigger reaction, but it did not, was that the FOMC members seem to believe that the inflation threat that they thought may have come from tariffs isn't there. And to the extent that prices are higher, that it's not, a permanent thing, that it's like a one and done situation. And of course, Trump has been rolling back more tariffs recently, a lot of items. And, ironically, of course, Trump and the Trump administration has to admit that we're taking away these tariffs because we're hoping that prices will go down, right? Because prices are rising, especially in a lot of these food products. And so they're eliminating the tariffs, which again is tantamount to an admission that tariffs make prices go up. Because if removing tariffs makes prices go down, well, then obviously imposing tariffs makes them go up, right? I mean, it can't be one without the other, right? And so it's an admission that Trump was lying the whole time when he told us that tariffs wouldn't make prices go up and that foreign producers would pay the tariffs. Clearly, they're not, right? They're not eating our tariffs. Farmers in South America aren't eating our tariffs. It's Americans who want to eat the products that are grown in South America and shipped up here. They have to eat the tariffs, right? Along with the bananas or whatever else was the subject of tariffs. So I think because a lot of the tariffs are being removed too, maybe the Fed no longer is worried about tariff-induced inflation. Right, but the real threat to inflation never came from tariffs. Right? Tariffs can exacerbate it, but the inflation is the monetary policy. The inflation is going to come from the fiscal policy. The Fed is ending quantitative tightening in December. The question is, when is it going to begin quantitative easing? I'm surprised they've held out this long. I thought they were going to start earlier. So I think they're going to start next year. It's pretty apparent that they're going to start doing that in 2026. And I think they're going to be responding not just to weakness in the labor market that's going to continue to get worse, but the bond market, I think, is going to fall. And ultimately, the dollar, I'm a little surprised that the dollar has held up so well in the second half of 2025. I had expected it to be weaker. Now, it had a very weak first half, but the dollar has bounced back a bit. But I think it's going to roll over in 2026. And if it doesn't contribute to the problems that causes the Fed to go back to QE, it will certainly be a consequence of the Fed going back to QE. So, we'll see what what we actually get from the Fed. I still think that the Fed is under a lot of pressure to cut rates. And I think that the statements about the fact that, oh, it looks like tariffs aren't really the threat, that may be partially the result of a lot of the pressure coming from the Trump administration to kind of look through these tariffs and to deliver rate cuts to the market to keep the air from coming out of these bubbles. And also the housing bubble. They're desperate for trying to find a solution there. Also, the healthcare bubble, right? Look at the price of healthcare. Again, the Democrats are acknowledging that we have a healthcare crisis and its affordability. They're saying prices are too high, premiums are too high. Yeah, but they promised that the Affordable Care Act was going to solve all that. That's why it was called the Affordable Care Act. The government promised to make healthcare more affordable. Instead, the government programs made it more expensive, which is exactly what is going to happen.
Government transparency failures and prolonged redactions continue to expose deep inconsistencies in how federal agencies handle investigations and public records. The delayed release of documents, often years past legal deadlines, highlights a pattern of withholding information that undermines accountability. Even the limited material revealed so far contradicts official narratives, showing internal coordination and PR efforts designed to present a failed investigation as a success. Emails, internal publications, and interagency communication clearly point to a collaborative operation whose stated justifications do not match the documented actions. This selective disclosure raises broader concerns about how institutions use secrecy to shape public perception while avoiding responsibility for errors in judgment. At the same time, financial markets reflect the consequences of policy mismanagement, with precious metals remaining strong as investors respond to weakening economic data, rising uncertainty, and ongoing structural pressures. The disconnect between official messaging and underlying realities grows clearer with each new release. Now, let's get back to the interview.
I just got more documents from the IRS, more than 2 years after I requested them. Now, they're supposed to give me these documents, I forget, 20 days, 30 days, right? The reason I filed my FOIA lawsuit against the IRS was because they're breaking the FOIA law. A, they're not giving me all the documents they have. And I know that because since I sued them, I've gotten hundreds and hundreds of additional pages that they claimed they didn't have before I sued them, right? So obviously they lied because they can't give me all this information because before they did, they told me, we don't have any more information. You got everything, right? So that was a lie. But the other reason that I am suing them is because 90% of what they're giving me is illegally redacted, right? They are redacting everything, entire pages, not, which you can't do. And all of the objections which they have given don't apply. It's a complete lie. But even the little bit of stuff that they don't redact is so damaging, right? It blows, them up. It completely proves my case. And I can only imagine if the stuff they're letting me see is this bad, I can only imagine what's been redacted, right? Because they're only redacting this stuff to cover their own asses. They want to cover up their criminal wrongdoing, which you're not allowed to do, right? The purpose of the Freedom of Information Act is so transparency. I can see when the IRS or any government is doing something unlawful, right? You can't cover it up and say, well, there's an investigation. See, one of the big things is they're claiming that I can't see this information because it relates to an investigation. Now, if it was an ongoing investigation, and if the information they're showing me could compromise that ongoing investigation, they'd have a point. But the investigation of me and my bank has been closed for years, and it found nothing. There were no indictments. So what's the problem? Why can't they release information that relates to a closed investigation that uncovered no evidence of wrongdoing? That's what they don't want to expose. The fact that the investigation found nothing wrong, that the bank didn't do anything wrong, that it was the government. They're using the pretense that the information relates to an investigation to hide their covering up of the results, and more importantly, their PR campaign to turn a failed investigation into a fake success. And the documents that I got on Friday, right, prove it. Even though I already got documents that proved it, I got more documents that prove it again. One of the most interesting things about it is if you go back and watch the press conference from when my bank was closed, and you can see that on my YouTube channel. or just Google Euro Pacific Bank OSIF, right? You'll see the press conference. Jim Lee, who was the head of the IRS at the time, said that the action against the bank, the investigation, the press conference, all this, it was all OSIF working on its own, that the IRS had nothing to do with it, right? Well, a lot of the emails that were going back and forth among IRS agents 2.5, 3 months before the emergency press conference, right? And because they knew they were going to shut down my bank for 3 months, and then they shut it down on the pretense of emergency. But obviously it wasn't an emergency, or they would have shut it down 3 months earlier. They wouldn't have just waited to get all their PR stuff going if there was a legitimate emergency. If customers' accounts were really at risk, they couldn't have waited so long. But the subject of all these emails is OSIF partnership press conference. So they're actually referring to a partnership with OSIF. Well, if it's a partnership, then clearly OSIF did not act alone, right? They had a partner, and the partner was the IRS. And the IRS had a bunch of partners because they had the J5. Also, there was an internal J5 publication, right? Like their own in-house magazine, in which they referred to their disruption of my bank as a key milestone, right? And they admitted that they disrupted my bank. But why did they do anything? They said that OSIF did it, and OSIF said that the bank was shut down because it was critically insolvent, which was a lie. But if the Atlantis investigation found no evidence of money laundering or tax evasion, then why did they disrupt my bank? What was the purpose of disrupting it if the bank didn't do anything wrong? I mean, if the bank did do something wrong, they would have, not only did they never indict anybody who worked at the bank, who banked at the bank, none of the customers have been indicted. Nobody has been, nothing has happened to anybody because nobody was doing anything wrong except the government officials who were investigating it. But they admitted in their own documents that they disrupted the bank, and it was a major milestone for them. Why? Because it gave them the publicity that they needed. And here is the proof. Go to tgold.com, buy some gold and silver, get into my mutual funds. I think the gold fund is getting ready to have another big move up. I think this correction is well overdone in gold stocks. It pulled back from a spike. I mean, we're above 4,000. We're above 50 in silver. This is a huge bull market.
Growing delays, redactions, and shifting narratives around federal investigations are revealing a troubling pattern of selective disclosure and coordinated messaging. And what the records show has widened, exposing how procedural language can be used to mask missteps, justify disruptions, and build media narratives unsupported by evidence. Even as markets face tightening liquidity, regulatory uncertainty, and weakening economic indicators, metals continue to demonstrate resilience, holding near major highs while institutional demand grows. Investors are increasingly turning toward hard assets as confidence in official institutions erodes, reinforcing the broader trend toward defensive positioning. The stronger these discrepancies become, the clearer it is that credibility risks now extend far beyond financial markets and into the core of government oversight itself. Share your thoughts on their analysis in the comments section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.